Target reports second quarter earnings before the opening bell on Wednesday. Analysts from FactSet are looking for earnings per share of $1.11 on sales of $17.4 billion. Here with a preview is S&P Capital IQ analyst Efraim Levy. And Efraim, we'll get to the earnings report in a moment, but first, on Monday, Target promoted its CFO John Mulligan to COO and named Cathy Smith as the new CFO. Your reaction to this development?
I think it's really about the company's plan to execute. They want to have more focus on doing a lot of the changes that they're bringing to the company. The company has closed its Canadian operations or put them as discontinued. It's planning to lay off a lot of its staff at headquarters. It's also changing the focus, trying to build up the signature core of its stores. I think that's really about making sure they can have the management there to execute the plan.
All right, now let's get back to its second quarter. The top-line consensus estimate is right in line with the revenue that the company reported during the same quarter last year. So why do you think analysts are expecting flat sales growth?
Well, I think that there is a competitive environment out there. There's a lot of promotions going on. They're still trying to win back some of the consumers that they lost to the data breach, even though I think, for the most part, we're back and moved past that, at least financially. All
right, and of course, rival Walmart reported disappointing quarterly results Tuesday. It lowered its guidance for the year on the heels of its recent move to hike wages. And of course, the strong dollar weighed on Walmart's results. Seems like, though, that these issues are more contained to Walmart rather than the retail space overall.
Well, I follow Target and some other retailers, but not Walmart. But I do think that there's differences between Target and Walmart, and their consumers, while they overlap, still that Target, that more upscale niche that Target focuses on, differentiates them from Walmart.
All right, and of course, during the first quarter, Target saw digital sales rise 38%. I mean, how do you think web sales will stack up during second quarter?
I'm expecting another quarter of strong e-commerce. I think that's a big part of their plan. They're making it available to their members with free shipping. They want to get people to come back and shop, and then they can do it through the omni-channel, whether people order online, pick up in the store, or they have it in the store and they have it delivered home. Whatever they want to do, I think serving the consumer will help drive demand.
All right, and finally, what about Target's guidance? Of course, we have the all-important back-to-school shopping season underway. I mean, what do you think the company will say about how they expect to do during this time?
Well, I expect that they'll present it in an upbeat mode. However, we see that there is some risk to back to school overall, that it could be a soft year, perhaps in the low single-digit growth over last year.
Even though we saw some pretty positive retail sales data just last week.
Yes, it's some of the dynamics that differentiate between the broader market and the back-to-school market may affect the season.
All right, Efraim, we'll leave it there. Efraim Levy from S&P Capital IQ previewing Target's second quarter earnings. Thanks for joining us. I'm Scott Gamm, and you're watching The Street.